Let me just talk about bear market strategies. These are some of the points that I wrote down that I thought maybe could help. Number one goal is that you don't want to lose lots of money. You just don't want to give back everything that you gained in the prior bull market. And that's why selling is so important, to preserve the gains. I've always said if you can get out within 10%, maybe even 15% of your high equity mark, you're doing a pretty good job, because sometimes the tops can be very violent and you can lose a lot very, very quickly. But once you recognize, hey, this is not a good market, then you really have to go to a lot of cash. And so, and I just read the other day that since 1928, a bear market occurs every 4 years. So you have to know that sooner or later something's going to start. And then the second point is focus on the price action of your stocks much more than the fundamentals. I mean, the fundamentals are looking back, and the price action is actually lots of times, what you're seeing in the market today is reflecting where the fundamentals are actually going to be 3 to 6 months time period. So if you see stocks starting to break down, you see the market, the index is starting to break down, it's telling you that fundamentals are probably going to change. So don't focus on what's already been reported, but more on the price action. And then third point, and this is that this is what William O'Neill, actually, when I was looking at, I was going through and looking at his comments on bear markets, he said the typical bear market usually has 3 separate phases or legs of a decline, interrupted by a couple of rallies that last just long enough to convince investors to begin buying. So, and some of these bear market rallies can actually last 15 weeks, and most don't last that long. And so far in our since we've seen the top late last year, we had really a 2-week bear market rally, and then things came off again. So and then also, I wouldn't try to pick the fourth point. I wouldn't try to pick the exact bottom. Don't think you had the goal is to get in at the bottom and say, oh, I bought that bottom day. It is much better to be late and wait for the market to actually build a base, build a bottom, and then start turning and following through. So don't be in a hurry. The goal is not the bottom day. The goal is to wait for the turn to set up. And in many cases, you get retests of lows where, even the buying that was done on Friday and on Monday, that might not be, even in a bear market rally, they could come down and retest and then have a 2-week or a 3-week rally. So just wait, be patient. Yeah, and most bottoms don't hit a low and then go straight back up. Most have retests. And so, and then the other thing I've always found that's very interesting, and maybe now we can look at this this period of 1991. You'll see, and David, maybe you can point this out. We
Yes.
really had really the first move down was into August. You went from 396 down to about 338, right there. No, go back. Yeah, that would probably be leg 1. And then there you go, there's 1. And then the leg 2 would take it from, it rallied for a couple weeks, and then it went down to 306. That would be leg 2. And then you rallied, you had another 2 or 3 week rally. You went to 326 down to that 290 area. So that would actually be the third leg down. So those are 3 legs down. And then you rallied back up. You had 2 very, very strong, 3 strong days, 1, 2, 3, back up to 319. And then you actually came back down, retested, even undercut that, and then the whole thing started changing. Now, because the interesting thing, if you look at the move up to previously at when it went from about 295 up to 319, look at the volume change. If you could point that out, it's at 2.2 202. No, go back a little farther. There, right? Yeah. On those 3 days, look at the volume change. You had 3 huge days in a row. Then when you pulled back down and had that last little undercut, the volume did not get as high as those 3 days. That's a real key. Then look at the volume pick up again. The whole picture starts changing on a supply demand basis. The volume is now changed from huge volume spikes down like you saw in July and August. And now in October and November, you're starting to see a lot more blue volume, a lot bigger volume as you start working your way up. And I'm always comparing the volume spikes like that when we hit 221, those 2 days where it says 221 in the middle of October. I compare, yeah, bring it, yeah, right in there. I compare what goes on even the weeks after that. None of the down volume days were as high as those two. So it's that, I forget whose theory it is, but it's equal and opposite reactions. You had a huge reaction up on volume, lots of demand, and you had no equal supply. The supply just wasn't there anymore. And then the real bottom came as you hit 321, and the great buy spot. This is where the market really started taking off was at those last few days in December. You got another 4 huge days of volume when the stock broke out of that base. Actually returned back down to that, and let's see, on 117 on January 17th, 1991. That's when Operation Desert Storm started, and the U.S. started bombing Iraqi positions. And it was an action. And look what happened on the day we started bombing. The market just exploded to the upside and never looked back. I mean, ground forces didn't get involved until February 24th. And the ceasefire actually ended 4 days later. But the other thing that's so interesting about this is if you would keep that same date, and let's look at a few individual stocks. Look at Home Depot at this time. Now look what Home Depot was doing during that same period of time. It was building a beautiful cup and handle. And the volume also, this was already in an uptrend and near its highs. And then when the invasion started, then this started breaking out of a beautiful base at 40 and just had a terrific move. And then also the other stock in that group would be, somewhat similar, Costco. And I still remember seeing all these cups and handles, and this was before we got involved, or before we started bombing. And I went into Bill's office and I said, Bill, I just can't believe this market is going to go down once we start getting really involved. And because I said there's one cup and handle after another, and I think a day later or so, he put on the cover of Investors Business Daily all these different cups and handles, and look at one more, Microsoft actually setting up beautifully at that same time. And see, these stocks were confirming that there was things that were changing. Look how tight that thing got at the end of December. It hardly, and maybe you can just point that out. And at the end of December of 1990, look how tight that thing got. Look how little the volume was. That's what you really want to see. That's what I look for in every stock, just about every stock I buy. When I talk about drifting, when I talk about going sideways, that's what I want to see. I want to see a volume dry up, and I want to see tight action like that, because that, especially if you have the fundamentals intact, that's usually right before the stock explodes. So, yes. So as I said, watch for changes in the price and volume relationships of the move off the bottom, and then I've always found too is that right after you've hit the bottom and you rally up and you come back down, maybe for a retest or even just a partial drift, that's where the pessimism seems to get the heaviest, because everybody's going, oh boy, we've rallied and now here we go down again. So be careful of that, because sometimes you might be early in buying and seeing these setups and then get shaken out on the last little turn. And then the other thing, the longer and deeper the drop, the longer it's going to have to build a base. And that's what happened in 2020. The market topped out, and it took 3 years for the market to pull back down, to actually build a base. And then even so that was in July of 2003 where the market finally based. July 2009, it took the market a while to recover. So the bigger the drop, the longer the drop, the longer it's going to take to recover, because it just takes people, they have to get their confidence back to move back in. The last other things that are important is cash is good. Don't fall for that saying TINA, T-I-N-A, which is there is no alternative. Cash is a great place to be in a bear market. So many people think they have to be invested all the time, but no, if the market is not giving you what your discipline is dictating, then there's no reason to be in the market. There are always going to be a few special situations that are making progress in a bear market, but it's much, much harder to make money. If I look back over 40 years, where did I make 99% of my money? It was in a bull market. Did I make much money in a bear market? No, I probably lost a little money in bear markets, but I kept most of what I had in the bull market. And that's your goal, is not to lose back. So many people, they're on this roller coaster investing cycle. They make money in a bull market, they give it all back in a bear market. They make it in a bull market and they give it back, and it just goes on and on. But go to cash, wait, be patient, and then wait for these setups to occur, look for the volume changes, and then stay positive. I've never seen a pessimist make money, big money in the markets. Always be looking for the next setup in a stock with those can-slim characteristics. And we're talking about now, and even the names that we're going over today, maybe they'll make some progress, but you're not going to make as much. It's not going to be the gains that you can achieve when you're in a really great market. This is more capital preservation, maybe making a few trades in here and there and a little progress, but it's much, much different. I think someone had a question about where your cash levels. My cash levels are at probably 90%. And the money that I'm using now is just almost to just get feedback from the market. Is it starting to turn? Can we get a decent rally? But we got lots of overhead above us. So that's why I say be very cautious.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.